Some stocks of some of my absolute favorite companies tend to sell off in response to earnings, even when the numbers are actually real good. Take Palo Alto Networks. As a cybersecurity kingpin, it's been a major long-term winner for my travel trust. Long-term. This stock is in the habit of pulling back after reports and then rallying right back and then some. Sure enough, so far, it's true to form tonight. Stock's down big and after hours. Why? Well, because Palo Alto beat the numbers, but they didn't raise a couple of key lines in their forecast, and that bothers people. We're going to go over that. My gut says you want to buy the stock on weakness because it's always been right. But my brain says we need to do the homework first. So let's check in with Nikesh Arora. He's the chairman and CEO of Palo Alto Networks. Get a better read in the quarter. Mr. Arora, welcome back to Mad Money.
Nice to see you again, Jim.
Okay, so Nikesh, you start off by talking about an inflection point. We're finally there. It looks like that the AI business is really powering your growth now.
Well, Jim, I was saying, I was at a conference this morning. I was at a conference last night. Everybody wants to talk AI. Everybody wants to talk agentic AI. And what's fascinating is that when people talk AI, all the naysayers, all the companies which are holding back on their technology transformations going to the cloud are suddenly trying to re-accelerate, because you cannot deliver AI unless your data moves to the cloud. All the new models, whether it's Google's announcement from this morning, the new versions of Gemini or OpenAI, everything's on the cloud. So if your data is not on the cloud, your company's not moving to the cloud, you're going to be left behind in this AI race. And with over $300 billion committed to building large AI data centers in the world in the next 12 months, everybody's got to go there. And when you go there, you got to do it securely. So I think this is a perfect time for security companies to be out there working with our customers to make sure, as we say, deploy AI bravely. And it's going to be an inflection point.
Well, let's talk about the Hitchhiker's Guide to the Galaxy, because you have a terrific Unit 42, which I am just stung by the fact that they were able to simulate an entire ransomware attack in under 25 minutes using AI. Nikesh, we're dead. If that's the case, if those guys can do that, we're dead. You can't stop that stuff.
Well, Jim, I'm going to sound like a broken record. You and I have talked about this. We've come from an era where it took days to figure out you were breached. Now we're down to hours, going to minutes. Now, if your attackers are working at minute speed and eventually real time, you have to be there yourself from a protection perspective. And I think that's where we're seeing tremendous success of our product XIM. We have 270 customers, average $1 million ARR. It's the first product in the history of cybersecurity to average $1 million a customer right out of the gate. And we're only 30 months out. So we think that has huge potential. And as that becomes more and more prevalent in the market, what you're going to see is you're going to see people start using that as the underpinning of their future AI security stack. So I'm telling you this today, 3 to 5 years from now, when you look back, you will say, I remember that point. That was a turning point in cybersecurity where it went back from being a passive, offline, slow perimeter protection business to being a real-time AI-driven business. Now, it's going to take a while to get all these customers to move in that direction, but I think we're there.
Well, Nikesh, you tell me that I won't remember years from now that a lot of people feel that you should have raised because it's your last, there's only one quarter left, and sure enough, this was a terrific opportunity to take up your annual recurring revenue, and you didn't do that.
You know what, Jim? We're here for the long game. And the whole idea of the long game is we believe this was a tough quarter to execute in April, as you can imagine. We had all this tariff discussions, customers starting to get nervous. Thankfully, all that was behind us, but there was a few weeks of sort of uncertainty in the market, which we all had to power through. So I think these are phenomenal results in that kind of an execution environment. It once again tells you that we have a team that puts its heads down and get power through things like pandemics, supply chain attacks, geopolitical tension. And that's what we want to do. We want to keep executing over the next many years to try and take the business and double it.
Okay, so let's talk about these acquisitions. Protect AI, Prisma, AIRS. These are obviously very important for what you're doing. I'd like to know why people should be even more encouraged to buy the stock of Palo Alto down here because of these two acquisitions.
Well, look, Jim, we went through a whole cloud security revolution 5 years ago, and we were very indexed on making sure that people can deploy the cloud in a safe environment. Now, remember, our job in security is to anticipate the trend and try and figure out where the puck is going and say, I'm going to secure the future. That's hard work because we have to figure out what are the different ways the world can go from a technology perspective and build that capability. So, the best compliment I heard the other day was a lot of the venture capitalists are Palo Alto's R&D lab, because they're funding all these great founders who are out there working on great technologies. We have the privilege and the luxury of being able to look at all the development going on in the market and say, I like this one. These guys on the right track. Let's go partner with them. Let's make them part of our team. So we went and looked. Protect AI was doing the best work in the market. Ian and his team are fantastic. We had a meeting of the minds. Ian's going to come over, bring his team, and he's going to run our AI security capabilities. So it's going to be great. We're going to double the number of people focusing on AI security at Palo Alto with Prisma AIRS. And this allows us to go to every customer and say, listen, I know you're concerned about AI. There's so many concerns. What is it going to do my workforce? What is it going to do my processes? But more importantly, what if bad actors take over my AI and all these agents? Then we will be in the control of somebody else. Now, that's what we need to scenario we need to protect against, and that's what AI security is going to do, and that's what Prisma AIRS is going to help our customers.
Is there ever a level where we just say, you know what, maybe we shouldn't have agentics because we can't control them, and we should just go back to people?
Well, I think, Jim, we're going to see, there's a lot of conversation about agents, and I'm sort of eyes wide open on the agentic topic. A lot of people have agents doing tasks which are non-regrettable. Go find me this research, tell me what I've got there. I think eventually you're going to have to give these agents true agency. And as I've said this before to you, for me, Waymo is an example of giving it agency. The car drives itself. There's no human controlling it. And at some point in time, these agents will have to get agency, and that's where real paranoia will strike. When customers are going to say, oh my God, you mean there's going to be this thing running around my production system and deciding how many widgets to produce, and it's going to manage the manufacturing capability by itself? Oh my God, what if this goes rogue? Please, can you help me? Can you give me a solution that allows me to protect myself in the case these things go rogue? And that's what AI security is about.
Gotcha.
It's protecting for the rogue scenarios where agents are going to go and possibly get hijacked by somebody.
Well, I think that's a terrific explanation, because I don't want to back away. I think that the future is agentics, and we can't go. There's just too many companies that want to do it, and we need it. We don't have enough people. We're 50 million people short, and it's been about 5 years from now. But I do want to ask you one thing. There was a time when your stock was down really big, and you came on, you talked about platformization. And I thought it sounded really good. I said, that makes sense. And then, of course, it turned out to be a great idea. Where are we now in platformization? Because now everyone else is saying, hey, I got a great idea, platformization. Where are we?
Well, Jim, I discovered after we talked about platformization that actually wasn't real words. So I'm delighted that we were able to make it happen. We did 90 platformizations this quarter. We're on track to get to our 2,500 to 3,500 platformizations by 2030. That allows us to be a $15 billion ARR company. We just crossed our $5 billion mark this quarter. So we're very excited. All the signs project towards us being able to get to $15 billion by 2030. And as I said, we're in it for the long term. So if we can take this business and triple the next generation security ARR by 2030, we're going to be a large company.
Well, it doesn't sound like you're sitting here thinking, oh, my stock is down 3.75%. What did I do wrong? I'm not getting that flavor from you.
Jim, I think more sellers than buyers this afternoon. We'll find out what happens tomorrow.
You know what? You are, in the end, a sage, my friend. And it has been right to buy every time, hasn't it? Been right to buy every single time.
Well, I'm in it for the long term, Jim. So I hope your shareholders and your club investors are looking at it from the same lens.
Well, we don't want to sell because the capital gain would be too big for us. We have to take our capital gains. We have to take out of the trust, so to speak. That gives me less opportunity to make more money with charity from owning the stock of Palo Alto Networks. That's Nikesh Arora, Chairman and CEO of Palo Alto Networks. You see he's thinking a little bit longer term than tomorrow morning. I think that's the way I want my CEOs to be. Thank you, Nikesh.
Thank you, Jim. Love to see you again.
Mad Money's back after the break.
Coming up, Cramer's putting his hard hat on and breaking down where companies tied to the housing sector stand. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.